It's a pleasant day to all of you. This is your Prof. Sir Dan. And in this video, we are going to illustrate problems regarding preparation of income statement for manufacturing business. Okay, this is our problem. The given are, we have our sales, and then we have data on inventory. And take note, class, we have three types of inventory. We have raw materials. Raw materials is the same as direct materials. We have the inventory for work in progress and inventory for finished goods. And we will have two inventories for each. The two dates, okay? The beginning, which in this situation is January 1st, that's the beginning inventory, and the ending inventory, which is December 31st. We will, in this problem, the assumption is that the reporting period is calendar year, January 1st to December 31st. So our beginning is January 1st and our ending is December 31st. Okay, and you have here the cost. And in some problems, instead of cost, it will be indicated as expenses, okay? And take note that the cost, there is a qualification, like for the cost is depreciation, then it was divided into factory, administration, selling. Okay, so there are several costs here. Okay, and the requirement for this particular problem is this. Prepare income statement for ABC Company for the year December 31, 2019. Present the details of the following as notes to income statement. Okay. So here, class, you are asked to prepare income statement. However, you are part of the requirement is preparing the details of direct materials, factory overhead, administrative expenses, and selling expenses. And you will present these details as Note 1, Note 2, Note 3, and Note 4. Okay? Let us proceed. So class, this is our problem. And the first thing that we are asked to do is prepare Note 1, which is the details of the direct materials. Okay? So in preparing direct materials, we need the raw materials inventory beginning. So we have to look at our problem. What is the amount of the raw materials inventory beginning? So here we will have here 40,000. So we will put 40,000 here. And then we have to add net purchases of raw materials. So we have to look at the cost. Okay, here we have to look at all the cost. Here we have depreciation, insurance, indirect materials, salaries, factory supplies, office supplies. Here there is purchases of raw materials. So we will add this to the raw materials beginning. So in this problem, we will have materials available for use of 105,000. Plus, when we look at the cost, we did not see anything about freight, purchase returns, or did not see any information on those things. So class, if there will be freight in, and if there will be information on purchase returns and purchase discount, we have to consider this in computing the net purchases. Okay? So we have to add the freight in and deduct the purchase return and purchase discount because what we will be adding from raw materials inventory beginning should be the net purchases. Okay, since there is none, there is no freight in, and there is no information on purchase return, purchase discount, so we will use the available amount of 65,000 as our net purchases. Okay, now we have now to deduct from materials available for use the raw materials inventory end. Okay, here we have here the ending is December 31st and that is 50,000. Okay, so we will have to deduct that. So we will be able to get the raw materials used, okay, or the direct materials used, okay, class, of 55,000. So we are done with note 1, the cost of direct materials. And for note 2, we have to determine the cost of factory overhead. So class, In determining the cost of factory overhead, we have to look all the cost and identify those costs that are related to factory overhead. And these are, so here we will have here, we will just a list based on how it is presented in the problem. So here depreciation factory. So it means that that is for the factory. That's factory overhead. So we will have here depreciation factory of 20,000. Here we have depreciation, administration, selling, insurance expense factory. That is factory overhead. So we have to write insurance expense factory of 5,000 and go down here. You have here indirect materials, and we have learned that indirect materials is part of factory overhead. So we will write indirect materials as part of our note, okay, of 42,000. Here, the next one is indirect labor. And we have learned that indirect labor is also a factory overhead, so we have to include it in the list. Okay, and here direct labor, it's not part of the factory overhead, administration, selling, factory supplies used. It says factory, so that will be the supplies used for the factory. So we have to include that 8,000. Office supplies, no. Rent expense factory, so we have to include the rent expense factory. So there is none. So this is what we have for the cost of factory overhead. We will total it to get the total factory overhead. Okay, so we have 123,000 as our total factory overhead. Okay, let us move on. Now we are going to get the details of our administrative expenses as our note 3. Okay, so now we have to go over again with the cost here and just identify those that are related to administration. So we have depreciation administration at 10,000. We have here insurance expense administration at 8,000. We have here salaries administration of 33,000. Okay, we have here office supplies. That's administration, of course. Okay, we have here office supplies of 4,000 and rent expense of 10,000. So that's what we have. Okay, so these are all the administrative expenses. So the total of that is 65,000. Okay, and the next note is details of selling expenses. Same process. We have to identify those that are related to selling. Here we have depreciation selling, so that's selling expense, so we'll write it down. And here, insurance expense selling, so we will write it down. And here, direct labor, no, it's not selling. Here, salary is selling, so we will write it down. Okay, and here, the rent expense selling. So the total of our selling expenses is 44,000. So we are done with the notes, okay? And now we can now prepare our income statement. So here, this is our heading. And of course, the first account in our income statement is sales. So here is the information about sales of 400,000. And then we have to deduct the cost of goods sold. And in computing the cost of goods sold, the first thing that we have to put is the inventory of finished goods beginning. And here we have to look at the inventory data. The beginning for finished goods is 45,000. So we will write here the 45,000. And as we have learned, we have to add the cost of goods manufactured. Okay? So in cost of goods manufactured, we have to determine that by adding inventory work in process beginning. So here, your work in process beginning is 35,000. And you have to add your manufacturing cost. And we have already, and now we have to list down all the manufacturing costs, which are the direct materials. And this is, we already calculated this when we prepared the schedule or the note 1 for our raw materials. Again, direct materials, raw materials are synonymous. So in that, we were able to get the total of 55,000 from our note 1, which is for raw materials or direct materials. And then we have to add direct labor. So here, it is a straightforward thing that the amount of direct labor is 45,000. So we have to add that, direct labor of 45,000. And then the factory overhead. And we have already calculated the factory overhead as our note 2, in our note 2, okay? And the total is 123,000. So these are all your manufacturing costs, and the total of that is 223,000. And in computing your cost of goods manufactured, work in process beginning, plus manufacturing cost will give you goods placed in process. And then we have to deduct the inventory work in process end. Okay, and we have to look at our data. This is our end, which is 30,000. So we have to deduct that from the goods placed in process, and that we will be able to get the cost of goods manufactured. And then adding finished goods beginning plus cost of goods manufactured will give you merchandise available for sale. And then deduct the inventory finished goods end will give you, this is now, we have to look at our inventory, and our end for finished goods, the inventory of finished goods end is 60,000. So we will have to deduct that, and we will get the cost of goods sold. So here, sales less cost of goods sold will give you your gross profit, less expenses, and we have already made notes on administrative expenses. And on note 3, the total of our administrative expenses is 65,000. And our selling expenses, it was on note 4, and the total of that is 44,000. Okay? And then the total of these expenses is 109,000. So gross profit of 187,000 minus operating expenses of 109,000 will give you a net income of 78,000. Okay, now you are done with your income statement. Okay, class? If you did not prepare the note, so you will have a long income statement because you are going to present here all the details of direct materials, then the details of factory overhead, then the details of administrative expenses. So in most cases, company would prefer to prepare a note so that it will not be too long, the preparation of your income statement. At the same time, it will not lose the important information of your income statement. If you want to verify the breakdown of your direct materials or your factory overhead or your administrative expenses or your selling expenses, you just have to refer to the notes. Okay, class? So here we will have another illustration. Okay, this is a problem. Okay, this is the problem of XYZ company for the year December 31, 2019. Again, these are the information. Okay, so everything, sales and other expenses are all in, and you have the inventory of finished goods, work in process, raw materials, and then December 31, 2019. So that will be your end. And January 1st, 2019, this will be your beginning. Okay, now this is what is required. Here, class, it says prepare statement of manufacturing cost. So you are asked to prepare a statement of manufacturing cost. Okay, like what we have just discussed in the previous lecture. And then prepare a statement of cost of goods manufactured. And then you here it says prepare notes to selling and administrative expenses. Then after that, you will prepare income statement. Okay, let us do this. So this is our problem. First is the statement of manufacturing cost. So we have learned that manufacturing cost consists of your direct materials. So in direct materials, you have to get by the way, the manufacturing will consist of direct materials, direct labor, and factory overhead. So we have to compute our direct materials. Our direct materials, you have to get your raw materials inventory beginning. So let us take a look of our inventory. So here, your beginning is January 1st, 108,000. Okay, 108,000. And now we have to add the net purchases. So let us take a look of this. So because we are going to add the net purchases. So you have here raw material purchases for 110. So we have to include the raw material. We are determining net purchases. So we have a calculation here. So 410,000. Because there are in this information about freight in, we have to add freight in, okay, and we have to deduct purchase discount. Okay, so here now we will be able to get the net purchases, and we will have to add the raw materials beginning inventory plus the net purchases will give you the raw materials available for use. Okay, and then you have to deduct the raw materials inventory end, which is here 137,000. Deduct that, then you will get the raw materials used. Okay, by the way, class, again, I would like to emphasize that it's up to you whether you want it to enclose in parentheses since it is already less. You can do that, not to enclose it. But in this situation, like getting the net purchases, it is important that you have to enclose it in parentheses so that your mathematical calculation will be correct. Okay. So here now the direct labor. So let us take a look. Oh, here this is the direct labor of 530,000. A straightforward thing. And our factory overhead. Now we have, there is no schedule. Okay, so we have to list all our factory overhead. So here we have here sales salary, so it's not factory overhead. Office supplies use, it's not. Repairs of factory machinery, so it's here factory machinery, so that's the factory overhead, okay, in the amount of 24,000. Indirect labor, that's factory overhead, so we have to put that in our listing. Sales returns is not. Sales discount. Factory supplies, so it's factory of 81,000. And here, advertising is not factory. Freight out is not factory. Office salaries is not. So here, indirect material. So that's the factory overhead. So we have to include that. So we can now total all of this because there's no more factory overhead. So now the total of your direct materials, direct labor, and factory overhead will be your total manufacturing cost. And now you have now the statement of manufacturing cost. Okay, let us move on. Okay, now we are tasked to prepare now the statement of cost of goods manufactured. And we have learned that cost of goods manufactured is that work in process beginning. So we have to look the work in process beginning, which is 298,000. And then we have to add manufacturing cost. Since we have already computed the manufacturing cost and it has a separate statement, so we don't need to put again the information under this cost of goods manufactured. If we will refer how much is our manufacturing cost, we have calculated that our total manufacturing cost is 1,224,000. So in this, we'll just have to present 1,224,000 in our manufacturing cost. So adding the two, you will have goods placed in process, and then deduct the work in process and here you have the work in process end of 321,000. So you will have now your cost of goods manufactured. Okay? And the other thing is that we have to prepare the notes of selling expenses. So let us identify which are selling expenses in this problem. Selling sales salaries is one. Okay, so we have to list sales salaries as part of our selling expense. Office supplies, that's administration, sales return, sales discount. Okay, that is not to be included on our selling expenses because sales return, sales discounts will be deducted from sales. Advertising, okay, that's part of the selling expenses. 48,000. Freight out is a selling expense. So you have to add that. Okay, there's none anymore. So the total selling expenses is 216,000. Now, our note 2 requires details of administrative expenses. So now our administrative will be office supplies used of 16,000. And then office salaries of 230,000. So our total, I'm sorry, this is supposed to be total administrative expenses. Okay. Okay. So we have that, the total administrative expenses. And now we were able to complete our notes. Okay. Okay, so this is what we have. Now, the last requirement is the preparation of your income statement. Okay, so we will be using now for our cost of goods manufactured 1,201,000 because we have already prepared this statement. And here we will be using already these totals, okay, in the presentation of our income statement. Okay, class, so now we are going to prepare the income statement. Okay, so in the income statement, we have to present our sales. So our sales is 1,890,000. Okay, and then we have to present the contra accounts of sales, which are sales returns and allowances and sales discounts. Okay, so we have to present that. Okay, and now we can compute the net sales. Okay, we have a net sales of 1,841,000. Okay, the next thing to do is do your cost of goods sold. Again, in computing your cost of goods sold, you have first to consider your inventory beginning, which is 340,000. Okay, consider that first, and then what you are going to do, add the cost of goods manufactured. And since that we already have a statement, so we will just indicate the amount of what we have derived from our cost of goods manufactured. And this you will be able to get your merchandise available for sale. And then we will deduct the finished goods and here 290,000 finished goods and then that will be your cost of goods sold. So now net sales less cost of goods sold will give you your gross profit, less expenses will give you your selling expenses. Since we have already done the notes on this, so we'll just have to uh, carry forward the total and the administrative expenses under note 2. Okay, so the total of our expenses is 462,000. So gross profit less expenses will give you your net profit of 128,000. That's it. So here, class, because of preparing a separate statement for your cost of goods manufactured, now the income statement is much more presentable in terms of understanding. So if you want to look at the details of cost of goods manufactured, you can just refer to that particular statement. And if you want to look at the details of selling expenses, just look at note 1. And for administrative expenses, note 2. Okay, class? So that's how we will handle preparation of income statement. Okay? So I will be pleased to answer all your questions. Please let me know. And this is it for now. Have a nice day and stay safe, class.